What is up, everybody? Logan coming at you guys with another video, and today I'm actually going to take you guys through a 0 DTE that I took today. I rarely take those these days, but we had a really nice edge. Vance was nice enough to come on for our last video. This was the 2 times the expected move. How many times in the last 5 years where we closed within it and then outside of it? So 9% basically if you round up. And then if we take a look and fast forward, most of those closes are to the downside, right? So in this video, I'm going to show you guys what I did today, what price levels I looked at, how I ended up executing that trade. So first, we'll start off by taking a look at the expected move chart. Yesterday, we closed at 45.49 with a 21 point expected move at close, which put our 2 times the expected move high at 45.91. And okay, I'm going to take a trade around that spot. So if we hop over to my Thinkorswim, you guys can see here when I started filling some orders. So these are orders for tomorrow that I put on, but I currently have some trades over here. I did 3 contracts. You can see they went on at 12.28 today. So I pulled a total of $375 on those trades. So for me, I found a little bit of an edge here. If we go and take a look, right, I got a $1.25 credit on these trades. Also, if you guys have gotten this far and you haven't left a like, a comment, or subscribe on this video, I'd really appreciate if you did it now. We're almost to 14,000 subs. Also, there's a link to the description if you do want to come trade with us in Amplified and take some of these trades with us as well. So today, scooping 3 little contracts here at 12.28, we can go to the charts tab. Right, and we'll take a look over here. Around 12.28 was this candle, this green candle. So right when we pushed up to like 45.85, I could get a $1.25 in credit right on that trade. Now, if we pull up the calculator app, so 45 right here, like I said, was at 12.28 time. We're above all the moving averages on one of my favorite charts with the momentum rising. And I did get tested on this trade. My strike price did get tapped briefly. But we still expired out of the money. But if you do take $1.25 and it was a 5 wide, so I divided by 5, I got an actual 25% return, right? And if we hop back over to YouTube, also there's a link below to Options AI for all my subs. So you have to be subscribed and all the Amplified members. You get a full month of commission-free trading on their platform if you just use the link down below, which is really cool, especially if you're someone who sells options. It's super nice and beneficial, and I plan on really switching a lot of my trading over there for most of next year on something that occurs 9% of the time. So I legit got a 16% edge on that trade. So overall, yeah, could the market have continued to rise against me? Absolutely. I would have been totally okay with it though, because I had such a large positive expectancy. And I was also only doing 3 contracts, which is only $1,500. So if you add the credit I got as well, which is at $375, worst come to worst, I'm only losing $1,125 at the absolute worst case scenario of maximum loss if I did no management. For my portfolio, that is extremely minor. So I'm not really too worried about that if that was to happen. But I'm going to start looking for more 2 times the expected move trades if I can get a really nice edge like that. And this is something I'm always working on as a trader. When we did get up a little bit higher, like 45.87, if I'd have waited to put the trade on, then I could have got like a $1.70, a $1.80 on it, maybe even put my strike prices up a little bit higher. But once you're in the middle point of the day, it's a little bit harder to do that, right? Like that's one thing I've really learned over time. If I really would have waited till 2 o'clock to put that trade on, yeah, that probably would have been the best. But if I tried to do like a 45.95, 4,600, the premium was so small at that moment, I probably would have got half the premium, and there goes my edge, because I need to get a good enough return to justify taking that risk, right? So for me, getting a 25% return on my collateral, basically risking at that point, that's 4 to make 1. And in credit spreads, you keep all your credit. So, collecting $375 was worth it for me on $1,500 because I really only have $1,125 at risk, which overall I shoot for $700 to $800 per day trading in total, right? Like between the swing trades, I just hope that's how it actualizes throughout the week, right? That's my goal. And then throughout the month, so I can look at the end of the month and be at that like 14 to 15 grand spot if I'm looking for income with the trades. So that is my plan. And that's why for me, I didn't mind risking a little bit to make a little bit there too in that way. I have some call credit spreads on for tomorrow as well. So we'll see how the news we get in the morning works for us with all the employment. So for me, I can go ahead and manage those trades if needed. Today was just a really nice little fun one. Try to chip shot and experiment a little bit with, we don't get too many options or, too many times where that 2 times the expected move position actually gets tested or gets us close enough to get better than a 10% return. Because if you're not getting at least, 9% on that and you're letting it go to expiration, so like anybody who does very wide, way out of the money trades all the time, and that's their only method with no management, no stop losses, those can get blown up all the time, and they will at some point. So it's kind of nice to wait to see which EM band is going to get tested, right? If we hop back over here, right? And knowing that, hey, we broke out of the EM high and that next EM for the 2 times EM band was 45.90. I'm cool with putting that trade on around 45.90, and I got enough credit to where if we did go all the way up to this, right, like we could have settled at 45.91 even, and I still would have made 25 cents on the trade or $25 in options, right? So per contract. So, I even had a little bit of buffer by getting such good credit. I can watch my short strike hold value, but my long leg lose value as the market goes sideways, as the volatility decays, and then I can position myself much better when I'm looking at a 0 DTE from that point forward. Paying attention to the next time that we get that opportunity, or if we get some sort of movement around the bottom end of the standard deviation charts or the top end, right? Selling a nice 0 DTE up here, maybe doing one up here where we open up over the expected move, and then you can sell a nice spread and do it on the other side and just slowly collect that volatility every day. So that's going to be my focus, as we come into the end of the year, trying to like chip shot some 0 DTEs here and there. But that's going to be everything for me in this video. If you guys have yet to leave a like, you could do that now below. I do appreciate all the support as always. The link is down to the Discord if you do want to come join with us. That'll be in the comments and the description. And that's going to be everything for me in this video, and I will see you guys in the next one.